Crystal Oculi, and I'm the Chief Financial Strategist here at Confidence Wealth. Every week, I try to bring something that's talked about, and I find it's very important and something I should bring out to you. So I know I talked about this before quite a few times about understanding your cash flow and that's cash flow management during retirement and planning for retirement. I'm seeing over and over again, even with my most savviest client, that's the part that's the missing ingredient for them that they're not quite grasping. So a lot of things, in your head, you think everything looks great, but really on paper, when you put it in and start thinking about the different things, it ends up being a lot more than you thought. I'll give you an example. Let's say you thought my expenditure is 100,000 net for my lifestyle, my expenses for the year, and that is what you want to make sure you're bringing home in retirement. And you may have a pension and Social Security, and altogether you're like, oh, great, that's 80,000 altogether. So you think I only need another 20,000. But that's actually not the case, because in reality, the 80,000 is gross, the 100,000 is net. So let's just pretend you're at a 22% tax bracket, plus maybe 8% for the state. So that means you really needed 130,000. So now it's really 130,000 minus 80,000. And what you need is the difference, which is 50,000, not the original 20,000 you thought. So all of a sudden, you can see that mathematically, that can go very quick, and how quickly you can take out of your IRAs is going to be more faster to supplement everything. So if you're not planning for that, that could be a big distribution shock for you, because I've noticed that a lot, where someone that we haven't seen before comes and sees us and they say that, I ran the numbers with my advisor, we talked, and it seemed like everything is great. But what was never discussed was the tax planning aspect of it. And a lot of times, maybe, they're helping you with your investments and they're not paying attention. They're thinking that you already did that math. So when you tell them that I need 100,000, I'm already going to bring 80,000, they think you already did it, or they're not even thinking about it. So this is what I find on a regular basis being the biggest red alert, in a sense, that goes on. I just recently this week saw someone that came and they're like, Crystal, Fidelity ran my numbers, everything looks great, I just want a second opinion that I can retire next year. Well, I'm so glad that they came to see me, because when I ran the numbers, that was absolutely not the case. And everything was not all great, because what they were planning again was that net versus gross, and they were not calculating for that. So in their scenario, for them to upkeep their lifestyle, they needed to work another 3 to 4 years minimum. Really, realistically, to make it cushiony, they needed to work another 5 years, because they really miscalculated those need of cash flow and expenses, and income versus what you need, and the difference has to come from your savings. The other thing is that really understanding your cash flow is going to help you be much stronger and savvier when it comes to your planning, because you have to calculate different things in retirement as well. So let's just say you're spending 100,000 in today's dollars, and that is, I'm just using that as an example because it's easy, and that's your expenditure. But let's say in hindsight, everything's going to stay the same. Maybe if you were driving to work, your gas will go a little bit less. But the truth of the matter is, you're going to drive other places. The other thing to consider is that every day is going to be the weekend. So when every day is the weekend and anytime you can travel, you definitely are going to spend more on luxury. Remember, there are the go-go years in your retirement, that first decade where you're going to really spend a lot more than maybe you would have even expected. And then later people think, well, it's going to be no-go years. But the truth of the matter is, again, during the go-go years, maybe that money was going towards travel and entertainment, but that same amount of money during the no-go years is going to maybe then the help that you need to maintain your house, the help that you need to maybe help you with your healthcare. If any of you watched last week, the healthcare webinar that I did, that was one that would even talked a lot about how much healthcare can cost during retirement, the out of pocket that most people don't think about. So again, these are the things to think about. The reason you need to understand your fixed expenses and your flexible expenses, because lifestyle is about those flexible expenses as well, not just the fixed. Then we have to calculate for emergencies that can pop up, because you can't tell the roof not to fall apart or the plumbing not to work and all these things to stay. You got to all stay great because I'm in retirement. That's not going to work, right? So you have to, in a sense, plan for those emergencies as well. And it's easily doable when you understand your cash flow. So that is going to be my biggest message for you during this week is understand your cash flow. Don't think I make a lot of money, I'm going to make a lot of money. It doesn't matter. Again, example you may have heard me talk about a lot is imagine one of your favorite companies. Let's just pretend Apple for a second, since we all have our smartphone, iPhones, and that's with us everywhere. So let's say Apple is one of your favorite companies. Imagine Apple saying, we're a great company, we do well anyway. Why do we really need to know what our marketing costs, what our payroll cost is? Why do we need to know what, all the money we spend on is? Let's just let the money come in and let the money go out. Well, guess what? I guarantee you they would not be a successful company if they did exactly that. So why would you think that you will be successful and will be your best in retirement if you did exactly what I just said Apple would not do? So put that time in, really understand it. It's very, very easy and simple to do. I know there are gadgets out there that do it. If you are a client or friends of a client, we do have programs and your site that can actually track that. That's something we can help you with. If you're more old school, like pen to paper, or you like to just think about it, I can send you an Excel sheet of all the categories you need to think about. You can print that and handwrite in it. But that is an exercise I'm going to challenge you on. Understand your expenses. And as long as you understand first the net, then you got to calculate. You have to take out more because you have to pay taxes in order to get that net amount. So again, the example that if you're at a 22% effective tax rate with the federal and 8% at states, so let's say you're at 30%. So if you need 100,000 net, you really need 130,000 gross. So again, I'm making this really easy and mathematic, but for everyone's going to be different. Depends where the money's going to come from. Is it from the pre-tax dollars? Is it from the after-tax dollars? So all that is going to matter. But I want you to understand the concept of, again, how much net do I need, how much versus gross, so you can calculate for the income that you're going to receive, because your income is going to be gross. So keep that in mind as well. When you look at your Social Security and pension, don't automatically think that's net. No, that's gross. Calculate what it will be net to you, then you'll know how much you truly need. And this is going to be a great exercise for you. So if it's something you never thought about and you're like, Crystal, I really need some help with this, please feel free to message me, send me an email, and I'll be happy to make sure you get the resources and whatever you need to get, track and control, more importantly, get control of your cash flow. Until next week, if you need anything, you know where to find me. Have a great one.